Okay, everyone able to see my presentation there?
Got it.
Okay. All right, so fantastic. All right, so this is a different class for Eric and I. We oftentimes do what's called the Washington State Housing Finance Commission class, and that is a 5-hour course that is very much geared towards first-time buyers, yes, but it's also very specifically around a lot of financial programs that they have that are for first-time home buyers of certain kind of income levels. And I'll apologize if you hear some ringing in the background. That was my dog having dinner. That's why I just realized I should not have let you feed him. So he's loud. I know, welcome Zoom. So anyway, Eric and I, though, recognize that the material that we share all the time within that class is relevant for all purchasing. And so we also we've been doing for 18 years also a 2-hour version of the same coursework that just goes through the basics of purchasing. And so that's what we're going to do today. We're not going to dive into the down payment assistance programs or any of the Washington State Housing Finance bond programs or anything like that. But those are products that if you think you might end up qualifying for them, you'll definitely want to circle back around with Eric after the fact to have your personal situation considered in that regard. My stuff doesn't specifically run into that set of programs unless we're just working with a lender that you do qualify for the programs, and you're going to see why that interacts with my side of the transactions as we go through my part of the presentation. Okay, so moving on, my main goal on talking about the real estate side of things is to talk about what you need to know, what you want to avoid, and how you can win when we're in the kind of market that we have right now. Because as I say there, winning strategies for today's Puget Sound marketplace. Because if you haven't been looking into the marketplace, you may not be as familiar with the fact that it's pretty competitive. There's a few rare instances where there's not as much competition, but most of all the county areas, particularly outlying areas, since we've had work from home options, have been at a pretty fast pace, including going even further out on the peninsulas and into Eastern Washington and other areas that might normally have been considered either vacation or retirement areas. So what you need to know, as I said, market is hot. What that also then translates into is that when the market is hot and there's a lot of demand and little inventory, it also means that we typically see appreciation in this market, higher than normal. An average amount of appreciation, meaning growth on the value of your property, is 2 to 3% when you have a stable market. But what we have is this hyper market. And with that, we're seeing growth in every market area between about 5 to 15%. Now, comparing that to other times we've had hot markets, between like 2005 and 2007, we were running 12 to 35% appreciation. But that's also when we had the wild west of loans. The downside was when we went into the great housing recession of mid-2007 to 2010, where we went negative 35% as a whole. And then starting in April of 2012, 2011 was a flat year. And then April of 2012, we went right back into a very busy market, running 8 to about 14%, and in some micro markets, as much as 25% growth from 2012 to where we are now, with only one slight slowdown, which was from about June of 2018 to February of 2019. So with that, when we have a hot market and homes are selling pretty quickly, and that means compelling homes, right? Homes that are well priced, good condition, great locations, the things that people are looking for the most, that is going to drive a lot of factors on how you approach doing your home buying. So it's really important, like number 3 says, to know what your preferences are and to try and hone that down as quickly as you can. Now, it's fine if you want to take some time, but just know, as we have an example with one of our clients right now, they started looking in the spring of last year, and the marketplace that they've identified as where they want to buy has grown 10% in the last year. And they keep complaining about the fact that, oh my gosh, everything's more expensive. I'm like, well, that's naturally what happens in a market like this. And it's not, people keep thinking for some reason that it might go down. And right now we don't see any indicators that it will, because we still have a shortage of inventory. And as of December 2020, had the lowest amount of inventory we'd ever seen. So unless we have some magical sprinkling of houses in our area, we're going to continue in this trend for a while. So you also need to really narrow down for yourself, how much time do you have, right? We all know that time is the number one thing that we all are trying to hang on to and use well. It's a thing that once it's gone, you don't get it back. So we know that when you're looking online, you want to be also out looking in person and narrowing down what your defining factors are for you, so that when you are really, truly ready, you can get making decisions. Because what we know is that when fear kicks in, when people feel like they don't know enough, they're much more reticent to take action. So if you feel like you don't know exactly what you want yet, you're probably not going to take action. If you don't really know what you can afford, you're not going to take action. You don't really know what you like, you're not going to take action. You're just going to get online. And I don't know how many of you may have seen that SNL skit about all the 30-year-olds, like the new porn version is like looking on Zillow, it's kind of a hilarious, comparison, but you could spend a whole lifetime just looking on Zillow and not doing anything at all. But you're going to be working against your own best self-interest if that's all you do. So the last thing I point on here is what you don't know can hurt you. So if you're not familiar with what's going on in the market, if you jump into things without understanding how it impacts you, if you don't have your financing set up correctly, it can definitely come back and bite you in the butt, and in sometimes ways that you really don't want. So we're going to start kind of diving into all of these different elements. So with that, what's it take to buy today? Well, one, perseverance. What we've seen with some clients is that they've come into the market, they've gotten discouraged, and then they've stepped out of it, only to come back stepping into it going, oh my gosh, the prices went up, or oh my gosh, the interest rates changed. Sometimes that's for the better, sometimes that's for the worse on interest rates. But in general, like I said, since 2012, we've seen nothing but growth on housing prices. So perseverance, really deciding that you're going to take this step, is going to make a big difference for you. You got to be motivated. If there's not a reason for you to buy, or if you have competing motivations, that's also going to become a problem. We have a person we're working with right now that we're trying to vet out. Is she really thinking about moving out of the area versus looking here? Because it's going to be two very different things if she decides to go elsewhere. And we want to help her no matter what, whether it's helping her make that decision or in finding somebody for her in that other marketplace who can give her the same quality of service that we provide. So those are conversations we constantly have to have. And in a market like now, where people can work from home, we see people moving into a lot of different areas. But you got to understand where your motivations are. Is it about the price? Is it about the location? Is it that you need to better your space? A number of different things. Sorry, I got to move some of my stuff out of the way. Willingness to share your needs, concerns, and information. This is a process that really does need people to be transparent, right? Both the agent that you're working with should be transparent about how they work, what they do, why they're helping you make certain kinds of decisions. We need you as a consumer to give us your needs, your concerns, and information that we have to have. And so that helps us, that number 4, good communication helps us to help you do the right things, whether it's write the right kind of offer, go after the right kind of property, making sure that there's full understanding as you go through some of the more complicated elements of a contract, because it can get gnarly sometimes, depending on who you're working with. And we often are having to do communication even outside of what we're having with you, because part of that is how we show property, how we deal with other listing agents, how we deal with the listing agent and their sellers, and all of the process as it works, the title and the escrow companies, all of it. Trust is absolutely imperative when you're working with the people that are going to help you with doing this, because we understand it's one of the largest assets you'll ever own. And we definitely take that into account and respect that. And you absolutely should trust whoever you're working with. One of the unfortunate things I learned when I first got in this industry was that consumer trust in real estate was actually pretty low. And they do, they do these different, kind of surveys out there every year about who are the most trusted jobs in America. And real estate's usually really low. One, maybe two steps above used car salesman. And for good reason, because it's really easy for a lot of people to get into the industry. The level of skill is wildly all over the map. And there's oftentimes a lot of people who are in it for the wrong motivations. And after this is all done, by the way, we are going to send everybody a copy of the slides. And then also we're going to send out a survey with all of this. But, the questions that are in the list I'm going to give you are meant to help you determine whether or not you feel like you can trust a person. Because in my industry, a whole lot of people watch things like HGTV and decide, oh, that looks like fun, and they jump into it. Or the bigger motivation that happens all the time is that people watch things like $1 Million Listing and think they're going to make a ton of money. And so they jump into this industry with money as their first motivation. And you really should be looking for people who are willing to give you education, good advice, and guidance, and who really understand everything around how the business works, no matter what part of the country that you're in, because it's the same from state to state in terms of the qualities that you're looking for, but the laws might be slightly different, the contracts might be slightly different, but overall, it's generally the same. And you really need to have that trustworthiness with the person that you're working with. I mentioned time already. Really be looking deep on how much time you have to be looking online and how much you can get out and see places in person. Because as I have mentioned many a time, you can easily be catfished by a property. Someone can have great photos, or there are some companies out there who are doing little, online staging or little tweaks so that it looks better than it actually is. I was just at one of these houses the other week with one of my clients, and I literally had to ask her at one point, because her parents are helping her buy, I was like, is your dad going to be mad if I help you buy this house? Because it was in that bad a condition. But she fell in love with it because it reminded her of her grandma. I can thankfully say that we did not put an offer in on that place, because I felt like we'd been completely catfished, because we went back and looked at the photos and it definitely looked way better in photos. But yeah, getting out in person is important, and we'll give you some tips along the way about what some of that is. But when we're in a hyper market like this, there are some trends that start to happen. Ability, again, really mostly determined by your financials and the lending process, and then also clarity about all of this and realizing that it's a honing or narrowing down of this process. So steps to buying. Some of this I'm going to let Eric handle when he gets to his part, but the first and foremost, the best thing to do is to get pre-approved, preferably what they call a full underwrite, because there's 3 different levels: pre-qualified, pre-approved, and full underwrite. And any of you that have been working with Eric know that he works towards a full underwrite if possible, which means getting all of your documents up front reviewed so that when we go into an offer situation, we're in the most solid position we can be. And as a person who does listing and buying side of transactions, I can tell you on the listing side, that matters. Several clients that we've worked with recently, when we've sat down with the sellers and we've gone through, my team goes out and we actually talk to each one of the lenders. We look at each of the letters that you received from your lender about your pre-approval, and determinations are made on the language and the follow-up that happens with that. So in one example, actually, Eric, can I use you as an example? Are you on mute?
I'm not. Can you
Oh,
hear
there
me?
you are. Now I can hear you. Can I use you guys as an example?
Of course.
Okay. So I'm actually currently working with Eric's family on an estate sale, and we had multiple offers come in. And in that situation, we had all of them with escalations, some of them pretty significantly higher than the asking price, and everybody had their version of a pre-approval letter. Well, as my team and I sat here together going through each of them, we were contacting all of the different lenders to find out what the quality of those letters were. So 3 of the 5 transactions had 20% or more down. One was 5%, but it was fully underwritten, which we knew, and it was the highest priced offer. The next best priced offer, based on the escalation documents, was 20% down, and we were told and confirmed by the lender that they had additional funds if necessary. But the problem was that she had not put them through a full underwrite. So that meant there was the potential that we could get into contract with them and still have that transaction fail. Even if they had money, their lending could still fall apart. So that's not necessarily the most, palatable, offer to take. So then we had another offer that was 20% down, fully underwritten, and we ended up using those data points to go back to that offer and getting them to come up on their price. And so we ended up with a really strong, low risk situation for the seller. And that's what you guys need to understand as a buyer, is that the seller, when they're looking to do business with you, especially when there is a long list of other potential buyers, they're looking for risk factors, right? So we're going to go through what some of those things are here in a minute, but that pre-approval, absolutely imperative when you're being compared. And so someone like Eric Osnes is someone who is at a company that can do that for you. Bank of America won't do it. Chase won't do it. Online lenders won't do it. There's a ton of them. There's some other lenders around locally that will also do it, but it's rare that it's one of the national banks because they have a bunch more restrictions because they are a national bank. So it's worth asking those questions. You're going to search for homes online. I always joke, it's like online dating. You're going to look at homes based on your availability. This is where I say the weekend warrior viewing could be your downfall. We do recognize that a lot of people work Monday through Friday. So a lot of people want to say, hey, I want to go on evenings and weekends. Right now, with where we're at in the COVID phase 2, they have reopened open houses. So you can go, and there's a maximum of 10 people, including the real estate brokers, which many of them now have 2 people on site because they have to help manage the door and the volume of people, as well as have someone available to answer questions. So maybe 8 consumers in the door at a time, and they're not going to let you be there for an hour if they've got a line of people out the door, right? So that's one restriction on open houses. The other thing, though, is that those individuals are not there. They're there to give you access, but they're not necessarily there to give you advice. So you have to weigh whether you want to wait for that. And then the rest of the time, they're going to be booked appointments. What happens in markets like this, though, is that most agents, good agents, will tend to try and target their listings because they think of that Monday through Friday, 9 to 5 person. They'll try and come out on Wednesday, Thursday, or Friday with the listings. And when we're this hyper market, many of them aren't even doing a full week before they do a review of offers. Many of them right now are only allowing 4 days on market. So if you wait till Sunday and they're reviewing on Monday, you've kind of shot yourself in the foot, because if you decide you love that house, you may not have time to get a pre-inspection if that is something that other people are doing. And I'm going to get to those types of things here in a minute. Okay. But just know, if you have some flexibility in your work schedule, or you're able to take some afternoons. Right now, as I'm watching the sun about to, go down, we have sunlight until about 6 o'clock, I think it is right now. Yeah, it's 5:25 at the moment. So we have light till about 6. And you can definitely book those appointments on Wednesday, Thursday, Friday pretty easily. But just know that there's a lot of people snapping those appointments up right now. Examples of homes that we're seeing, we had a client competing against 35 offers up in the Linwood area recently. That meant there were a lot of showings to get to that, and it was only a 4-day on market. There have been times where there's expected to be so much demand, they're only allowing for 15-minute windows versus the default of 30-minute windows, because that's the other thing during COVID that we have as a restriction, is that when they're doing showings, we can't layer on top. The fact that they are allowing open houses is unique in that otherwise they will not let 2 agents show at the exact same time. So we have to schedule. And the faster we know from you that you want to see that house, the better the options of you getting a time that works for your schedule. Okay. And then after you've had a chance to go out and start looking at these homes, hopefully at some point you're like, oh my God, I found one. And it's like finding the right person to marry. And it feels great. You get excited, right? So now you got to do a little bit of determination around that. But how do you decide what's the right one? We always recommend that you work with your agent to come up with a must-have and a nice-to-have list of things for your home. Now, for some people, that might mean, okay, how many people are in your household? That might first determine how many bedrooms you need. Okay, how many people are in my household? What else do I need? Do I need an office? Do I need a guitar room? Do I need a play space? Do I need, there's a number of different things that have to do with every individual lifestyle that's out there. So you really want to look hard at what those things are for you and then start that on your must-haves. Oftentimes I ask people, how many butts in the kitchen do you need to have? And that's because some people really, really don't like galley kitchens where you can basically get one person in the room at a time. And they don't want to be going back and forth, because a lot of couples like to cook, or maybe you're like me, you're single and you love to have friends over and you want a bunch of people mixing around inside the room with you. Lots of people love these open concept type of homes. So you want to think about what that space looks like for you. And of course, by the number of bathrooms, some people, don't just think about how many toilets you might need, because I have that conversation with people a lot. But if you have a significant other, do you care if it has dual sinks? Because I've had that conversation with someone where they're saying, oh, I can't stand his shavings leave stuff all over, or their toothpaste, or their whatever, or they leave their makeup, and I don't have any room. And, it just depends, right? Everyone's lifestyle and what's happening in their life is different. Some people are like, I do not want to have people walking in my bathroom when I'm entertaining. So be thinking of those types of things. You also want to decide if you want to do all the searching, or if you want your agent to help you with that searching, or working some kind of combined tandem operation on that. And the reason I say that is because we have a lot of different options available for you. And when you're interviewing agents, you want to ask what are all the different tools that they have for finding a place. And I say this because for some of you on the call, not everybody on this program is buying here in Washington. So I'm saying this in kind of a general sense. So everyone has different tools available to them. I know for us, and my team's going to laugh at me when they see me pick up my phone because we have a mobile app. They're over there laughing. But we have, there's in our local area, there's the multiple listing service portal, which unfortunately or fortunately, because it's so big and it's been around for so long, they couldn't just turn it into a mobile data type of app because there was just too much for it to try and convert. But they did come up with a thing called HomeSpotter that is an app we can send to people's phones, and you can look and you can message back and forth. You can send us what you're interested in, all of that kind of thing. The portal also allows people to send notes inside the body of that. And what's fun about being able to use HomeSpotter is you can come up with whatever search criteria you want and then alert us for that. Because sometimes people start to play with the parameters, right? Like you're going to give us a first set of parameters, but then you might want to play with it a little bit, because if you're not finding actually everything that you want, or maybe you want to start considering another town over or something. You can play with it without having to have us do all these machinations on your search, and just first see if it works for you. And if it doesn't, then, no big deal. I can tell you as an example today, though, one of our clients has some very specific parameters on her search. And I go through and do what I call concierge on it. And I'll look specifically for all the things that she's looking for. And only if they match everything will I send that to her. And then when I do it, I make sure and text her immediately, because I know she's at work, right? So then I text her immediately, say, hey, check your email. I just got done sending you 3 great new properties to consider. And that was really helpful yesterday, because we did that. And she went out with Rick on our team and looked at some properties. And now we have an offer that we're waiting to get submitted. So, you have to figure out what is the right pace and communication styles for you guys. Also, homes are like history. People know I'm famous for saying that all the time. And they're also like humans. So you may find that certain kinds of homes tend to speak to you. I say that as an example. I know Laura and Antonio, who are on this call, you guys went out with Bebe on our team recently. And it was newer construction that you guys tended to relate to a lot more than some of the older style. And that's because every era was built differently, and they come with different kinds of features. So unless it's, say, a 1920s craftsman that's been completely remodeled and opened up, otherwise that house is going to be really choppy and have things like the kitchen cut off, and maybe it's going to have a weird set of bedrooms. Or maybe it's a finished attic that, has weird ceiling heights and a bunch of things like that. Whereas a house that was built from 2000 to today, it's going to be pretty traditionally a 2-story with most of the bedrooms up on 1 floor, 2.5 bath minimum. They come with very kind of consistent features in certain decades. And you can certainly narrow those down, or you might be like me, who I like a lot of different housing types. So it just depends on what speaks to me. I've had a house in 5 different decades now of different types. So, it just depends. Homes are also like humans, or like bodies. Their attractiveness, we'll say, is often determined by how good a long-term maintenance they've received. I joke because my house is about the same age as me, and I think we both had pretty good upkeep. So I think that's always kind of fun. And then, of course, I brought up earlier determining your lifestyle needs, because one type of home isn't always going to fit every kind of need that's out there. And, be open and adaptable, because, again, maybe you like that open floor plan, but you didn't think you would like a split level. Well, a lot of single story and split levels right now are having their configurations changed by either flippers or just people who've lived in them over time. So sometimes they become more appealing than they used to be for someone. This was just kind of for fun to show you that not all photos online of houses are beautiful. These are actual listing photos active right now, and they're all, well, at least one of them is completely gross. I'll let you decide which one. But it also tells you that because every agent is very different about how they talk with their clients, and every seller is different about what they're willing to do, sometimes you can find a diamond in the rough. If you're looking and not finding what you need, or you're being outbid all the time, sometimes, especially if you're working with an agent who's got a good eye for this, you can get some good coaching on what to look for. Now, I'm going to say this thing is just gross, and it's probably got horrible, horrible maintenance overall for the entire house. Probably wouldn't recommend it anyway. This house, when I saw it, most of it was just weird because it has this fake deer head that the agent said conveys with the property, which I don't understand why, since it's not mounted to anything. This one, hard to tell what the flooring and stuff is, because that's a rug. There's a bunch of different things going on here that's like, well, it's got kind of an interesting roof line, but there's just some junk in here that's distracting me from really seeing the house. And this, actually, that's just a bunch of stuff. All these, video games or movies or whatever the heck is going on inside of this room. Really, if you wiped all of that out of there, that'd be a very normal room. And so when you're working with somebody who, and that probably is an older person who just, that's how their life is right now. And if you were to take all those things out of there and repaint it, it would probably be just fine. But we're all such visual creatures. The tendency is, it's like, I always joke the online dating thing, but it's like swipe left, 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 left. Oh, there's a right. You know, you're going to be doing that all the time on these things. But every once in a while, you might have someone like myself who, if we haven't been hitting the right thing, or I see the potential, then I'm going to at least have a conversation with you of like, you sure you don't want to go see that one? Because here's what I'm seeing. Like, if I can get you to just stop looking at all this person's stuff, then there's a pretty good house behind it. Because more people are also considering whether or not they're willing to do a little bit of work as long as the bones are good. You just got to be able to see the bones, right? I actually have some really funny pictures when we get done, if we have time, of like the craziest house with a bunch of dressed up mannequins. It's quite stunning. But I'll save that if we have time. Okay, so once you've actually found the one, there's basically 6 steps that you have for the buying process. So first, you're going to be writing an offer, determining what those offer terms are going to be, figuring out if there's multiple offers. Are you going to have to put in escalations? Does it look like something that's going to be countered? We don't know yet, but you're at least coming up with your base offer. In that, you're going to have financing. And we have to get through that. So I mentioned TRID disclosures. Again, this I'm going to leave for Eric to talk about later in the appraisal process, but that is definitely part of what we have to do. There's a home inspection. That's usually probably one of the most critical areas, because we always say it's financing and inspections that are the 2 things that kill transactions. And we're going to go over that here in just a minute about what those look like and the different kinds that are going on right now. Title review. Just making sure that ownership is correct and there's not something on there that's going to impact you in the way that you want to use a property. Other things that come up that people don't think about when they first get into this process, but also impact the cost of ownership, and that you need to be doing some process work in the transaction, are things like homeowners insurance and setup of utilities and understanding what's there and available to you. And then, of course, at the very end, there's closing, which is a combination of things that all happen in very short order of signing, then funding, recording to the county, and then the key transfer to you. So what goes into an offer? Now, I know this is a busy page, but that's because offers are not trivial. So you're going to get copies of this after the fact, but basically all the main things that are in there are your price, your down payment, earnest money that you put aside during the transaction, your closing date and the possession, because they're not always the same, timelines for all the actions for all of the different things that you have inside of your contract. We have to identify where your funds are coming from, not just your lender, but where your money is coming from. There's other disclosures. Many of them are state and federal requirements that we have to go through. We have to know what appliances, because those also impact you and the cost of ownership on this property, because not all of them come with a washer and a dryer, or sometimes not a refrigerator, maybe not a microwave, all that kind of thing. So you want to know about that. Sometimes you're getting more appliances than you want. Sometimes they got some junkers out in the garage that they're planning, or the basement, that they're like, those are going to stay. And now you're going to have to deal with them after the fact. So there's a lot of different ways that plays out. Sometimes someone may list a property a certain way and then swap out some of the appliances in the middle of the transaction. So you have to be aware of those types of things. Utilities, I put that in there, one, because we make sure, at least here in the Washington State area, to use the right documents that make sure lienable utilities get paid off. But you also want to know the source of all of those, because not all of them are lienable. Some of them can become a problem after closing. And they're not all traditional utilities, because we also still have septic systems and wells that are used here in certain areas. So you have to know whether or not it's on public or private type systems. Mentioned there's inspections. Sometimes you've done a pre-inspection. Sometimes you might be asked to waive inspection, hopefully with a seller provided inspection, or you can put an inspection within the body of your contract. If it happens to be in an HOA, which could happen, I know Laura and Antonio, you guys are looking in some areas that commonly have homeowners associations. You're going to want to look at those documents also, because those impact your owning of the property and your costs. Same thing if you're buying a condo. Legal description is an absolute requirement. You don't have a legal contract in the state if you don't have a legal description. We have to identify who's party to the sale. And that actually is title, escrow, seller, buyer, and the agents involved, as well as the lender. So there's a lot of people who are part of this whole process. Then if you are doing escalations, that has to be in there, and we have to delineate the amount that you're going to do to a cap. We'll get in that in a minute. And then in some cases, credits to the buyer. So some folks are using programs where maybe they need help with closing costs. And so we have to put those in the offer right away. And that becomes part of the financial aspect of this contract. How credits also can show up is that if you do get a chance to do an inspection and some issues are found, rather than fix the problem, sometimes that seller will provide credits to you instead. So speaking of money, show me the money. I know it's an outdated reference. I tried to find the video clip, I couldn't get it. So too many things on Google nowadays. So when we're talking money, what are those things? So price considerations. When you're looking at this place, even if it is a hot market, you really want to look closely at the condition, because that will make a difference on how high you might want to go on the price. What's the competition of buyers? Hopefully you're working with an agent who's going to be making those phone calls, trying to find out what the activity looks like, whether or not really offers have arrived, what the expectation of offers might be, so that you have some feel for that. I know my team also, when we do, I mentioned a market analysis on here of comparables, we frequently will call those other agents to ask how many buyers came in, because especially if they're in the same price point that you're looking at, well, only one person got that house. So if 35 people lost out on it and you're looking at another house down the street, well, guess what? There's 34 other people, or 33 at least, that are looking also still at the same time. So if it was a similar type property, they may all have just jumped over there. So it all depends on what kind of new activity is happening and what new inventory is coming on. So again, your price is all based on your ability to buy. What's your cap? Your escalation is only as good as as high as you can go, right? Now, some people don't go to the top of what they're able to afford. That's totally fine. And that should be a consideration and a conversation you have with your agent. We are 100% behind the idea of own the stuff you have. Don't let the stuff you have own you. We're very fiscally conservative in that way. I know that Eric is the same way. We very much want to see the people we work with be successful long-term homeowners. And if you're overdoing it and it gets you to a place of unsustainability from a cost perspective, that's no good for anybody. So if we're talking about it through the whole thing, we're having conversations about, is this at a payment level you're going to be comfortable? Is this something that Eric can make sure you qualify for? And he will run things like, we'll send the actual listing to him so he can see it and get what the taxes are and the other things that will impact you to make sure that payment still fits within a comfortable threshold for you. We also, when we do that market analysis, are trying to determine, can this thing appraise? Because if you have a financing contingency, it will, in most cases, also be contingent upon the appraiser saying, yes, this is what the house is worth. Because if that person says it's not, then we have some options. One of which is we can try and challenge that appraiser or have another appraisal done, but your lender has to be willing to accept that new appraiser's information. We can try and negotiate somewhere in between. So let's say you have extra cash and you're willing to pay the gap between those two prices. Okay, somewhere in between, that's an option. The seller might be willing to just go to whatever the appraisal price is, but it's going to depend if you had other competing offers and what those offers said. Or you can walk away from the transaction, because like we said, financing and inspections are the two things that kill deals. And that financing piece isn't always whether or not you qualify. Sometimes it's whether or not the house qualified. So there's two elements to that. Okay. I mentioned the credits for closing costs. They can be in your original offer terms potentially, or you might be able to use them in an inspection. It's not always going to work out. I'll go back to the case of Eric's family property. We had 5 offers that came in. 4 of them did pre-inspections. So all of them, as they were purchasing that, marked in their inspection document that they were accepting, they'd done their inspection and were accepting the property in the condition it was in. And there was no request for any closing costs of any kind. Evidence of funds. This is super important, everyone who's on this call. State of Washington has really narrowed this down because there have been periods of time over the last 20 years where sometimes people haven't been forward with where their money is coming from. And it's not because they're trying to hide it. They just didn't know that it was necessary to disclose where it was coming from. So this evidence of funds, as you can see on the screen, this comes from a variety of, do you have the actual cash? Meaning non-contingent, in your account, liquid funds available to transfer tomorrow if you had to, right? Stocks. If you're using stock in a mutual fund or you have RSUs or anything like that where you need to sell them to get access, that's not cash. And I have had situations where someone has, an agent has put an offer in saying that somebody's got 20% down in cash, only for me to get a phone call 2 weeks into the transaction hearing, hey, so the stock purchase is done. We have the funds now. And my side was like, I say, what? Because why this matters. For anyone who's ever known anyone or been an Amazon employee or maybe an Amazon employee, there was a short little period of time when HQ2 was called out as an option and the stock went down. And I happened to have been in contract with a client at that time who thankfully had sold the stock he'd set aside for that right before that announcement. And we had talked about it because he said, had he waited one more week to complete that sale, he would not have had the money that he had in his contract to buy this property. Stocks go up and down. The stock market is fueled by fear. You cannot 100% always know that those accounts are going to be what you think they are any given day. So if you're going to be using stock, you need to be thoughtful about it. You need to make sure it's disclosed and you need to be watching it and talking to the people at your accounts. You also need to understand how long it takes for that process to happen, because that is another hiccup that we run into at times. And that also ties into my thing about IRAs and 401ks. Many people sometimes erroneously believe that they can borrow against these funds, only to find out either one, they may not be able to, or two, the process time was not what they thought it would be. And so you don't want to write a fast closing offer if it's going to take you a month to get your funds. So you have to be talking about these things all up front. And I'm not saying these things because I feel like giving people nervousness. It's because we've run across it and we know it happens. And so we want to make sure you don't run into the same issues. Gift funds. We had this happen with someone the other day. We were talking about earnest money. She told me how much money she had. And then she called me back. She's like, oh, I found $5,000. And I went, under the mattress? I don't think so. And no, her sister decided to loan her some money. We said, well, no, she's not loaning it to you now. She's giving it to you. Because that's the deal. You can't borrow it from somebody, but you can have it gifted. And so in this case, there was a conversation about the gifting of funds. So if someone is giving you a gift, whether it's towards your closing costs or your down payment, we need to know because we have to identify those funds. Why does it matter? Well, because if you can't close your transaction because you didn't have enough money, that's a problem. The contracts themselves say very specifically that the standard purchase and sale agreement is that you have the funds available unless otherwise denoted in the contract. And that's where the other addendums come in play to denote where those things are coming from. Your down payment, evidence of funds, is it a gift? Are you selling a house? Is it a down payment assistance program? What is it? So this is also, I go back to the beginning of my part of the presentation saying that you have to have all this information and this clarity and communication with your agent. These are the things we have to be able to trust each other enough to talk about. Do also recognize that in the state of Washington, we have what is basically the same as an attorney-client privilege in terms of confidentiality with our customers. So everything that you share with us has to stay within our walls. We can't share it with other parties unless we have your permission. And the only reason someone would ask for that permission is if it's to try and help you leverage up against maybe another competing offer. But in the general sense, we don't talk about your personal finances. But we do have to disclose what you're using for the contract. Other types of interest might be, for terms, rent backs for the seller, because hey, they own something. If they live in it, they got to go somewhere. Do they need the money to then finish closing on another place or to have enough moving costs to get the heck out of Dodge? Well, a rent back to a seller can be quite useful, because if they also have the same problem of competing against other offers, contingent offers aren't real popular right now because they're considered risk to a seller. So that person may need their money to then go and fight for their own next new place. So it just kind of depends. We're always looking at that as to whether or not that might help you have an advantage. Closing timelines also can do that. The full underwrite can sometimes help you with a little bit faster closing. We don't really see those 2-week closings anymore. There's some people who are still saying that they offer them. I think those are sketchy. I think those are tactics that some companies are using to try and just get the phone to ring. But many times they don't actually work. So because of something that I know that Eric's going to talk about in his part, which is TRID, which I joke is the reason I drink, but it actually means the Truth in Lending Act, Real Estate Settlement Procedures Act, Integrated Disclosures. Very long acronym. And it's a smashing of 2 acronyms together. So yeah, a lot of fun stuff there. And the down payment amount, right? So if you have 20% or more down, of course that looks better than a 5% down. And it's an interesting thing for consideration too in discussion, because I did have a client of mine who basically said, well, if we just have the full amount by the end, what's it matter? Well, again, listing agents are going to talk about the risk factors. And like I used in Eric's example earlier, I had 3 offers with 20 to 25% down or 20% with extra money available. And then I had a 5% that had the highest price. If I ran into an appraisal problem, the people with only 5% down, we were going to run into issues. One, that number may not hit. And chances are, if they only had 5% down to buy to begin with, very unlikely that they had anything else to fill in the gap of the rest of those numbers. So it was a big risk for the seller to consider taking that deal, no matter what. So it just kind of depends. And listing agents will ask a lot of questions. Nothing wrong with smaller down payments. Oftentimes you run into a lot of other people with the same situation as you, but it's going to vary from place to place. Earnest money, I just want to point out, even though there's a lot of words here, that's just the money that's already part of your down payment and or closing costs that sits at the escrow company while you're conducting your side of the contract. You're just saying, hey, seller, sell to me. And for that risk, this money is going to go over here in case I just walk off. Now, you will have safety nets inside your contract that as long as you follow your timelines and all the rules, if you have to cancel based on those, you will get your money back. This is just money if you say, whatever, I'm out of here, right? So it's very rare that that's lost. Also, you'll see that I say many agents believe 1% to 3% is typical. So an example is a $500,000 house. You might see anything from $5,000 to $15,000 offered, sometimes more than that, maybe 25 if they're really trying to show, major earnest, yes, I want to buy your house. But that does become part of your down payment and closing costs later. So it's not money on top of what you're already spending, but it is money that you need to have access to right away, because it's due to go in within 2 days of your contract going into mutual acceptance. So it needs to be liquid funds. This can't be your stocks that you got to go sell. Title and escrow, not going to bore you too much with those parts, but title basically just makes sure that the ownership interest on the property is handled and that there's an insurance policy for your ownership period. It also is where you will find things that are recorded against the title, such as homeowner association CC&R documents, encroachments, potentially easements. Easements can show up in a lot of different ways. Utilities, boundary, issues that maybe a neighbor needs to have access through your place, or vice versa. Maybe you get it through theirs. Sewer lines, all kinds of things. They're also making sure that the parties are who they say they are, and that there aren't going to be clouds on title that will cancel the transaction later or maybe delay it. Escrow manages all that money for both the buyer and the seller, making sure every penny is accounted for. And they're also going to send you disclosure, so you make sure that you respond to anything that they ask you to at that time. They handle a lot of third-party payments and what have you. They're basically like the accountants of the transaction. So inspections, general inspection, physical property, all the way from the roof to the crawl space if there is one, the slab, what have you. I mentioned in here that it takes about 1.5 to 3 hours, depends on the size of the property. Also, how many problems there are can sometimes take longer if it's a really big house with a lot of problems. Condos are often around $375 here locally. Homes about $450 to $600 for kind of an average size. If you go real big, they might be more because there's more time involved and more things to test. There are 3 things we like to call out in kind of the gold standard of home inspectors. One, of course, they need to have the DOL requirements. So you're going to see those here. In today's world, in 2010, they changed how licensing was done. They didn't used to have a universal license. The only thing they had to have was pest inspection. They flipped that, got rid of the requirement for pest inspection, and then made a standardized testing and classroom kind of setup. There's still a wide variety of quality out there, a wide variety of the kinds of reports being used. We highly recommend that you work with somebody who's going to have embedded photos and doesn't just do checklists, but has like detailed reports. Also, some of those guys out there still carry the pest inspection license. We strongly recommend that you utilize those folks because there was an example that if we get a chance to, I can pull up a report and show you one house that had no fewer than at least 3 different kinds of, it had carpenter ants, wood boring beetles, and anabid, I believe, beetles as well. So there's a bunch of stuff that's really hard to identify if you're not familiar with it. And then errors and omissions insurance. So that means like if they did miss something pretty hefty and you were financially harmed by that, you might have a claim to be able to make against that insurance, because most of their contracts limit them to the cost of what you paid for that report, which again is only $375 to maybe $600. And if you end up having a really, really big problem, that's not going to cover much. Other things that we do recommend, particularly in older homes, 30 years and older, but not even always necessarily, waiting that long, because I've seen this in younger homes too. Sewer scopes, which range about $250 to $400. We jokingly refer to them as house colonoscopies. So they go from the closest they can from the house all the way out to the street if they can get there, because sewer lines, you can't see them, and they often have a lot of problems, whether it's cracks, root intrusions, displacements, all kinds of things. And sometimes you're connected to other neighbors and you want to know that. So a lot of stuff to be, those are not inexpensive. I think the cheapest sewer line repair we've seen was $1,500, and the most expensive was about $35,000. So definitely nothing to snip at. No pun intended with the sewer. And then, of course, if the house is on septic or well in a private system, those have separate inspections. Septic usually paid for by the seller. Well inspections paid for by the buyer in most cases. These are things we like to see in inspections. Lovely new roofs, beautiful crawl spaces with the, this is actually insulation up here. Batting that's nicely tied into place and looks very, very lovely. And the vapor barrier goes up and over the wall, so it's nice and dry and beautiful down there. But this is sometimes what we see instead, which is not fun. This is pretty much probably a rat problem. And water in the foundation area, also not great. Common problems that we often find, roofs, the condition, how many layers of fascia, damage around the gutters, lots of things like that. Age of systems, a lot of the housing stock is 30 years or older, about 70% of all of our housing stock is. So there's older systems if they haven't been upgraded or replaced over time. Pests, this is this type of thing where the insulation is hanging down like this. That's basically a rat rave going on. Big party happened down there, and they've been living inside the insulation and also using it as their bathroom. That's part of why this is all falling down. Vapor barrier can get all torn up too. Electrical panels and outlets can be problematic, or the way wiring is done in various parts of the property. Non-working appliances and water problems, like I showed in that one photo. Drainage, crawl space, downspouts, tons of different places that water can become an issue. It's like the #1 problem for a house. I mentioned earlier, homeowners insurance, you want to get quotes up front. A lot of times we say check first with your car company, but not all great car insurers are all great home insurers. So you want to maybe shop around a little bit and get the best coverage and pricing for you. And then Eric and I, by the way, since we do our radio show, have several radio shows all around insurance. So if you are interested in getting some of those shows, let us know when we send our survey out to you, and we will be more than happy to send you links to those podcasts. Utilities often can't be set up until you get recording numbers. And oftentimes sellers sometimes forget to cancel their accounts, even if the escrow companies close the accounts. So it's just be patient. Everyone's in a different place and a different process and transition when this is going on. So just be patient. You'll get your stuff. They're not going to shut you off. But just, people who are really, like prepared, oftentimes are like, why won't they let me do this? Well, the seller may have been in transition and moving. They just hadn't gotten the phone call made yet. So, but it'll happen. It'll definitely happen. Closing time in our state, which is a deed of trust state. Usually the signing happens at least about a day before closing, in most cases. I'll say, Harrison, you're looking at Kansas and Missouri. I can tell you for a fact, Kansas is a day of. So you will sign and fund and close on the same day. But here in Washington, that's slightly different. So most of the time we're not doing that all on the same day, although on occasion it can happen, but it's not generally the case of it. So we get signing done. Then after the escrow company and the lender make sure all those numbers are in alignment and everything's good, then they get the release to say, okay, here comes the funding. You will, at your signing, know how much you need to bring. That's either going to be through a wire transfer or a cashier's check. Can't do personal checks. Earnest money can be a personal check, but not your down payment at the closing. Has to be what they call verified funds. So that's going to be done. So they'll verify your funds are in, your earnest money's in, the lender's got their money in. Then they can do what they call release to recording. And then that's going to go to the county. And I'll warn all of you right now, very fast-paced market with rates as low as they have been. The refinance market has also been quite busy. So most of the local Puget Sound County recording offices are not guaranteeing that your recording will happen on the same day that you release. Now, some of the title companies are working out some things to help manage that so it doesn't disrupt transactions. However, we can't guarantee it on every single one of them. So that's why, again, be adaptable, be flexible, try not to freak out. Also, don't pick Friday as a closing date. That would be a #1 big recommendation when it comes to picking closing dates. And then also secondarily, don't get your moving truck set up for the day right after closing. Because if anything bumps, no good. Because now you're going to have to reschedule everything and it's going to bring a lot of stress on you. We usually recommend that you end up picking a Tuesday through a Thursday timeline for that. And then that way, if you do bump a day or two, you've got some room, preferably then a Tuesday or a Wednesday, really. And then give yourself, especially if you're in a lease situation, give yourself some grace. Don't try and close at the end of the month either, when you know after you've given notice you got to be out of that unit. Give yourself a couple of weeks to be more relaxed and have more flexibility and get all those things done, because there's going to be more than you think. And you want to give yourself less stress during this process. So these are some of the best practices that we've learned over the 2 decades I've been doing this, plus the 3.5 decades I've been owning homes. So definitely be prepared. And again, depending on who you're buying from, you might be able to get keys earlier in the day, but your contracts will give the technicality that they have till 9 p.m. on the day of closing. So if it works out for you, we often say, just don't plan on having to get it that day. Make sure everything goes as planned, and then be more relaxed and pick them up the next day. We have more of that, because if you're busy waiting to get that day, then if it doesn't happen, you're going to be that much more, just rattled by the whole thing. So that is my part of it. And I'm going to open it up. I believe all of you are able to unmute. Are there some questions for me? And Eric, that was an hour and 2 minutes because we started at 5:04. Just so
That's got to be a record.
All right. Do we have any questions from anyone right now? Oh, there we go.
Well, Laura and me are good. I don't have any questions at the moment.
I hope it was helpful.
Yeah,
yes, it was.
Okay, great. And Chris, I know you've been through this process and you've learned some of this stuff the hard way. Hopefully some of this is still useful for you as you get ready to do it again. Oh, are you there, Chris? I can see you're unmuted.
Oh, definitely.
Okay, good. And do you have any other questions I can help with right now, or do you want to do that after the fact?
After is fine.
Okay, all right, sounds good. Harrison, how about you? I know you're getting ready to rock and roll down in the Kansas City area.
Yeah, no questions for me. I think all this is pretty self-explanatory. But
okay, cool. And it should help you as you're working with the people that you're talking to down there too. So you'll at least know going into kind of the general piece of it, and then Jeremy he'll walk you through what their local stuff will be, and be prepared. They do have termite requirements down there because termites are a big deal down that way.
Okay.
Okay. All right, and Daniel, how are you? Are you doing okay? If you can get unmuted.
We're good to go. We're sitting on the couch with the computer into the TV.
Slow off mute. Thank you.
Oh, that's all good. Okay, and I see Haley's there with you then. Okay, fantastic. All right, well, I am going to turn it on over to Eric then.
Okay, can everybody hear me okay?
Yes, we can.
Oh, good. Okay, just making sure. I'm going to do a quick share screen here also.
Okay, I'm going to make you host in case you need that. Yeah. There you go.
Okay, good. All right. Today has been a, for this kind of presentation, I'm going to jump around just a little bit, but I wanted to give an update to start with on interest rates. And this is something that's going to definitely impact everybody. It's been a extremely volatile week so far, and not in a good way. We are seeing some fairly strong upward pressure on interest rates. I'm showing a graph right now, which is, these are mortgage-backed securities. And when this line goes down, that's bad. So that means that interest rates are rising. So we're keeping a very close eye on this, but it's looking pretty volatile right now. So we got some upward pressure. We're hopeful that rates will settle down here over the course of the next week or two. But you can kind of see right here, just since February 12th, our average mortgage rate has gone from 2.86 to yesterday we were at about 3.14%. So rates are up, fair amount. That said, these rates are still historically low. I mean, they're still very, very good. We're expecting that not anything super crazy here, but this was sort of a unwelcome change to interest rates. Kind of looking at the historics, just to kind of put this all into perspective. A year ago, we were about 1% higher than we are today. So not too bad, not too shabby still. But keep an eye on that, because along with that, we're also seeing house appreciation. And Reba talked about it. You can see home values are going up, and Reba mentioned earlier, we expect that trend to continue. If rates rise significantly, that could slow it down a little bit. But again, we don't really necessarily see that happening. Knock on wood. Here's a little graph that sort of puts this all into perspective, give you some numbers to look at. And this really speaks to affordability. With the rates as low as they are right now, the affordability for homes has never been better. We also have to balance that with home prices, which have never been higher. So just for example, I'm going to kind of pick on about a $2,500 mortgage payment here. This is principal and interest, so not counting property taxes, homeowners insurance, HOA dues, that sort of thing. But if you look at a $2,500 payment at a 3% interest rate, that buys you a mortgage of almost $593,000. If that rate goes up 1%, that's going to knock you from 592 down to 523. If it went up another percent, that knocks you down to 465. Another percent down to 417. So these interest rates can really have a strong impact on your affordability, and that's where you'll hear a realtor or a lender say, now it's never been a better time to buy, and you should buy right now, and sometimes you think that's kind of a sales pitch. It's not. If we look at it right now, the rates have bottomed. I don't think they're going to go much lower than we've been, if at all. And we don't think that home prices are going to go down either. So, the sooner you kind of get into that, the better, the more affordability and buying power you're going to have, especially, basically taking advantage of these low interest rates. I want to talk a little bit, and I'm going to move fairly fast here. And again, I'm always happy to come back one-on-one and go over this, but I want to give some general guidelines on parameters for financing, and also give you some comparisons and things. This is information that I've kind of put this together because it's hard to find online. You can get bits and pieces of it, but it's hard to kind of see it all sort of put together and specific to our local areas. So I want to talk first about minimum down payments. And right now, if we're looking at a conventional mortgage, there are some loan limits in King, Pierce, Snohomish County. There's a base limit across the state, which is $548,250. Now you can, if your mortgage loan amount is no higher than $548,250, and one of you is a first-time buyer, you can buy a home with 3% down. And if you, in King, Pierce, Snohomish County, we also have what's called a high balance loan limit as well that goes up to $776,250. You can go up to that level with a 5% down payment. And then if you're looking at FHA financing, which is a government insured program, you can do basically 3.5% down up to $776,250. If any of you are a veteran or the surviving spouse of a veteran, you can go up to $776,250 with zero down. If you go above $776,250 for the loan amount, King, Pierce, Snohomish counties, that becomes a jumbo loan. And it's a whole different set of rules, different investors. Your minimum down payment is going to be at least 10.1%. So there's a big jumping point when that loan amount goes up above that $776,250 mark. Really, really important. We've also had folks where we've pre-approved them let's say we pre-approve them for 750 loan amount, King, Pierce, Snohomish County, all of a sudden they say, great news, I found the perfect house. It's 750, excuse me, just like we wanted. And it's in Port Orchard. Well, Port Orchard's Kitsap County. Got a different loan limit there, 548, 250. So, anything above that is jumbo. So it's important to know where you're buying. Excuse me, got a bug in my throat here. Know where you're buying so we can make sure that we've got the appropriate program and the appropriate loan amount. The excuse me, when we get to jumbo financing, the programs, the documentation, the guidelines, how we calculate income are very, very different. So it's really important to know those distinctions.
Eric, can I throw something in here real quick?
Sure.
I know you're also having a little second. Just a reminder to everyone though too, like if you are qualified at 750, be keeping in mind that we're talking about how busy the market is. So you probably don't want to be looking at your top end of your price point to begin with, because you need to have some room for flexibility in case you have to compete on that.
Absolutely. Yeah, we're trying to pre-approve people to the highest, excuse me, most likely dollar amount just for that very reason. Boy, sorry about that. I've been fine all day long, and all of a sudden I start choking up here. It'll make me cry. Anyway.
Because you just love finance so much, Eric.
know, I love it so much. It just gets me all emotional.
I know. You should hear him on our radio show. He cries almost every week.
I know. Talking about the bond market. Well, what happens with, and even right now, we have folks where we pre-approve them for certain levels and limits, and we're having to go back and revisit that. If you're maxed out for what you're looking at, I almost need to look at every property that you're interested in just to make sure that you do qualify for it. We've had to give a little bit of bad news over the last couple of days as we've seen some programs, the rates have come up a little bit on us. So definitely need to stay in close conversation with your loan officer on that. Make sure that what you're looking at is something that you'll indeed qualify for. Now, the whole do I wait or do I not wait thing, the next question that typically comes up is, well, I don't have 20% down. I don't have my down payment ready. And, I'm going to just wait until I get more money down. And sometimes that can hurt you, because if you do wait till you got the 20% down or so, you might see the rates be higher. You'll definitely see home prices be higher. So then let's look at what happens if I put less than 20% down. With a conventional loan, that means PMI, private mortgage insurance. It's required when your down payment's less than 20% down. You get nothing for PMI. It's something that's added to your monthly payment. What it does is it protects the lender if you were to default on the loan. It essentially covers a loss that a lender would incur. The cost of PMI varies. It depends on, number one, most important, probably your credit score, how much you're putting down. Even the property type and the loan amount, the loan program can impact the cost of PMI. There's certain first-time home buyer programs where the cost is significantly lower. There's also different ways to structure it. We can set up PMI the traditional way is just it's added to your monthly payment, but we can also set it up with what's called a split premium, where there's a one-time fee charged up front. In exchange, your monthly fee is significantly lower, usually less than half. There's even a single premium where you pay a one-time fee and then there's nothing added to your monthly payment. And then we also have ways to build all of that into the interest rate. So you pay a slightly higher interest rate and there's no PMI added to the payment. So PMI, unfortunately, is kind of a rite of passage for many people. And the benefit is it gets you in the home sooner. And so you can start riding that appreciation train. PMI does not need to stay on the loan forever. You can get rid of it. And there's a few different ways to do that. But the general rule is at any time, if you pay the loan balance down to 80% of what you originally paid for the home, it can be removed. If you, let's say you do a bunch of remodeling on a home and it's worth more, we can also reappraise the home. And as long as your loan amount is no more than 75% of the new appraisal, we can get rid of it. Or we can wait 2 years, reappraise the home, and as long as your loan amount is no more than 75% of the new appraisal, we can get rid of the PMI. So there's a lot of misinformation on PMI and how to get rid of it. So I mention it now, and be sure, and you can always refer back to me, because you won't get a lot of documentation with a mortgage on how to get rid of it. It's something you need to kind of keep in mind and have that, be thinking about that, because we want to get rid of it as soon as you possibly can. And you do not need to refinance your mortgage to get rid of it, although that's another option as well if you've got 20% equity in your home or more. All right, I know I'm going fast here, so hang in there. Big, huge Hurricane grid here. And I just want to show a couple quick comparisons. I did 2 sales prices here, one at 500,000, one at 600,000.
You're still in the MVS live. I think you have to do a reshare.
And oh, hang on. Okay, let me just try that. Let's see here. Let me jump back into this. Thank you for the heads up on that. Okay, here we go. All right. So big old grid, 500,000 and 600. So what I did on the 500, and can you see that okay? Just nod if you can. Okay, good. 3% down, 5, 10, 15, and 20. Shows the loan amounts based on those down payments. Shows the principal and interest payments based on those down payments. The cost of PMI. There's some tiers with PMI, and the more you put down, the less expensive the cost of the PMI. So it's at its highest level with 3% down, and lowest level with 15% down, and nothing if you put 20% down or more. I have some estimates for taxes and insurance and a total payment. So you can kind of see the difference. So if I put buy $500,000 home with 3% down, my total payment's going to be at just under $26.60 per month. I'm estimating closing costs and reserves for taxes, insurance, all that about $7,000. Give or take a little bit. I'll show a bit more detail here in a minute. Total cash close $22,000. If I went to 5% down, my payment's going to go down by what, just under $80 a month, but my cash is going to go up by $10,000. So there's a trade-off there. Do I want the lower payment? If so, I need to cough up a lot more money up front. If I waited till I got the 20% down, you can kind of see the difference there. My payment's going to be about what, $480 lower, but I also need $85,000 more in additional cash to close. So there's some compromises, when you compare the down payment and the payment that goes along with that, to the higher down payment versus lower down payment. So I hope that makes sense, but this is just kind of a graphical way to show the differences. I also showed 600,000, and you notice there's no 3% down option with that version, and that's because our maximum loan amount in King County is $548,250. Does that slide show, Reba? You see one showing loan limits, $548,250 and all that?
Yeah, for King, Snohomish, and Pierce, yes, I do.
Yeah. Okay. Good. Okay, just making sure my PowerPoint's doing what it's supposed to be doing here. Okay. All right. So I'll get into a couple of examples here in a little bit, but let's talk first about credit, because one of the things that PMI is influenced by is your credit score. Your interest rate is also heavily influenced by your credit score. So what can you do to get the highest possible credit score? And the first is to understand what makes up your credit score, because it's not all just about how you make your monthly payment. About 35% of it is. 30% of your credit score is, and this is an area where you can really have a huge impact on your score, is determined by how much you owe. And the biggest thing is if we look at revolving credit, bank cards, credit cards, MasterCard, Visa, department store cards, what your balance is as a percentage of the credit limit. If you can keep your balance on a credit card no more than 25% of the credit limit, that will give you the best possible scores. The higher your balance goes as a percentage of the credit limit, the more it impacts your score, and it's significant. If you're maxed out, you have a $5,000 credit limit and you have a $5,000 balance on an account, it hammers your credit score. And that's important because I'm sure we've all got those mailings. You get them in the mail. Hey, transfer your balance over to this new card and we'll give you 0% interest for 6 months, or something like that. If you do that, you're going to get hit for two things, because the third item is how long have you had credit? It takes 6 months before a new credit account really starts to positively impact your credit score. Up until that point, it will negatively impact your credit score, which is why you don't want to buy anything new right before you're looking at buying a house. So you get that solicitation, transfer your balance over. You're going to have a double hit. Number one, you're going to be at 100% of the credit limit on that new account. And number two, you have new credit. And it really, really hurts your credit score. So maybe financially it saved you a few bucks on interest. Just don't do it before you buy a house. Do it after you buy. That's fine. Credit inquiries, 10% of your credit score, only if there are an excessive amount of inquiries. Some lenders will try to scare you from shopping around. I'll be perfectly transparent about that, saying if you do that, you're going to have more inquiries on your credit and it's going to hurt you. The truth is that you can have an almost unlimited number of mortgage-related credit inquiries within about a 2 to 3 week window, and it's not going to hurt your credit score. If you go outside that window, it can start to have a little bit of an impact, and it's not a huge one. And finally, the types of credit used. Credit accounts that give you the best rating are installment type loans, car loans, student loans. Housing is the most important one, of course. And then below that would be revolving credit, and below that would be finance companies, things like that. So payday loans and the like. So, keep a real close eye on how you use your credit. You can actually monitor your credit for free. There is a website. The official website is called annualcreditreport.com. You can actually pull your credit reports from each of the 3 credit bureaus. And it used to be once a year. Right now with COVID, you could do it every month without a cost. And that's a good way of keeping an eye on your credit. And what I would also recommend is to put a freeze on your credit if you're not planning on using it. You can also do that for free with every credit bureau. That will help you prevent identity theft and fraud. So put the freeze on. Just don't forget your passwords or your PIN numbers. And if you do that when you're ready to start a pre-approval process for a mortgage, you can unfreeze those. Lender jumps in, we pull the credit, you put the freeze right back on after we're done pulling the credit. But I'd strongly recommend getting a freeze on your credit. It's just there's so much identity theft going on right now and so much fraud. You really, really have to be careful. So some tips, basically you want to don't open any new credit, when you're getting ready to buy a home, because it takes 6 months before those new accounts are established. Don't close any accounts either. When you close an account, you lose the credit rating for that account. So if you have something that you're not using, it's maybe a 0 balance or thereabouts, that's fine. Don't close it. Maybe even just use a credit card every now and then, run a little balance and pay it off. Just pay it on time. And that will actually help you get the best possible credit rating. If there are mistakes on your credit and you want to dispute something, that's fine, but don't do it right before you're starting the mortgage process, because if there is a dispute on your credit, we cannot move forward with your file until that dispute is resolved, which typically takes 30 days. So you want to make sure you don't have any disputes active, right when we're in that process. So keep your balances, no more than 25% of your credit limit, and don't close existing accounts. Don't apply for any new credit, when you're starting that home buying process. There's one thing that our company does, not every company will, but once we pull credit, if your credit score is not exactly quite where we want to see it or where you want to see it, it's not getting us the best possible rate, it is possible for us to do an analysis of your credit. And sometimes it takes just some small changes, maybe pay a balance down a little bit, or sometimes we have, maybe you're on an account as a authorized user, but it's not really your account, it's your parents' account or something. We can remove you from things like that. We can do what's called a rapid rescore and immediately update your credit score without having to wait. Some lenders will make you wait 90 days before you can actually pull updated credit. So that's one thing I really, really like to do. I'll give you an example. We had somebody recently and their credit score was 719. And at 720, the interest rate goes down. And so we went and did an analysis. They had to pay like $150 down on one account. It lowered that balance down to the 25% of the credit limit mark. We did a rapid rescore, and their score actually went up to about 740, which actually put them in an even better category for their interest rate. So that's something that we can very actively watch and manage and help on, to help you get the highest possible credit score. I always throw this slide up there. Hopefully nobody falls into this category, but if you do, or maybe you've got friends that do, call this the scratch and dent department, where maybe your credit's not perfect. That's not the end of the world. And there are some waiting periods for serious credit events where we have to just wait till somebody has come out of it. Collections, if you have a collection on your credit, we typically don't really care about that. We're not going to require you to pay it off unless it's maybe some significant numbers. If there was a bankruptcy in the past, with conventional loans, we would need to wait 4 years, but there's FHA financing where we would only need to wait 2 years, or VA 1 year. If there was a foreclosure in the past, you owned a home and it didn't go well, FHA, we only have to wait 3 years. Conventional is more than that. There's a couple other ones, short sales and deed in lieu of foreclosures, kind of have similar waiting periods. And these are like a short sale is if you owned a home and sold it for less than what it was owed on it, that's considered a short sale. A deed in lieu of foreclosure is essentially almost the same as a foreclosure. It means a person just gave the home back. We really want to avoid those if at all possible. And one thing I would always tell people is once you own a home, if you ever get into some sort of financial duress, please, please, please reach out to your lender, talk to us. There's programs, we can modify loans, we can do forbearances. There's a lot of different things we can do to help avoid foreclosure. That should be the absolute last resort, under any circumstance. Okay, so I'll keep moving on here. Reba talked a little bit about cash earlier. Reba had a slide showing stacks of dollar bills, stacks of money, and I kind of cringed when I saw that, because as a lender, we can't use stacks of money. If you show up to closing with a suitcase, we can't use it. There's a couple laws that lenders have to follow. One is called the Bank Secrecy Act, and the other is called the Anti-Money Laundering Act, which means we must document the sources of funds used for a down payment. The way we do that is we ask for 2 months of your bank account statements. And on those statements, we're looking for, we would have to document any large deposits. So large deposits defined as anything that's more than half of your monthly income. So if we see large deposit, we need to know where it came from. It needs to have come from an acceptable source. So, the short rule, I guess, if there's large deposits that are needing to be dealt with, I'm going to look at 2 months of bank statements. If I don't see any large deposits on those, we will be fine with that. So just, kind of bear that in mind. A gift is totally allowed. Gift can be used for your down payment, for closing costs, more the merrier. The only catch with a gift is that it must come from a relative, although we don't ask for a family tree. That's our policy. And we do need to document the source of the gift. So we would do that by getting either a copy of a check or a wire transfer from the donor of the gift. And then everybody also signs a gift letter, which is basically stating that you're not asking for any repayment, of that gift that's been given to you. So you can also use other assets. You're selling a car, selling a boat, something like that is perfectly acceptable as well. But there is a paper trail for all these sort of things. We essentially have to show that you owned it, what it was worth, and show the paper trail of you receiving the funds for the sale of it, bill of sale, copy of the check, that sort of thing. So I had one client once, we actually sold a horse, and we used that. That was an acceptable down payment. We just had to document it. Okay, so cash is a biggie though. It's one that lenders get super, super fussy about. So just kind of do some planning ahead on making sure that we've got those funds available. Reba mentioned also earlier, if you're liquidating money from a brokerage account, or maybe you're borrowing money from a 401k account, that's perfectly fine. Just make sure you get your ducks in a row, plan ahead. How long is it going to take? Make sure you can get that in a timely manner, and keep records. We need the paper trail, to show where that money came from. All right. What do I qualify for? Kind of a basic slide here, but the short rule is that we can qualify you up to a debt to income ratio of 50%, meaning that your total of monthly payments, mortgage plus any other debts, car loans, credit cards, student loans, anything like that, is no more than half of your gross monthly income. And, that's the max, 50%. Anybody that's lived with a 50% debt to income ratio can tell you that it's not a lot of fun. That doesn't really give a lot of money left over after closing. So the most important thing I would say is, when you're thinking about buying a home, be thinking about, I'm going to be, sending out this much money every month for a mortgage payment. What amount am I going to be comfortable with? And really, really give that some good hard thought. If you're paying rent now of, let's say it's $1,500 a month, and we're going to be going to a $3,000 mortgage payment, am I right now able to save $1,500 a month, in addition to the rent I'm paying? If so, fantastic. You're probably ready. If not, then you'll have to rethink, okay, my spending habits, is this something that's going to work for me? So we take your income times 50%. We would back out any monthly debts, car loans, credit cards, student loans. There's alimony or child support. What's left is how much you qualify for a mortgage payment. We call it PITI, principal, interest, taxes, and insurance. That would also include PMI, and if there's homeowners association dues, that's going to be our maximum total housing payment. I didn't go into much more detail on this slide because it gets a little bit complicated. The cost of property taxes will vary depending on the sale price. PMI, based on your credit, HOA dues may or may not play in depending on if you're buying a home, townhome, a condo, or a home in a PUD where there are homeowners association dues. But I can work on those one-on-one with you. Happy to. Takes me just a few minutes to kind of put some numbers together for you. There are some zero down options also available. And again, for this class, I know we're moving pretty fast with everything, and I wanted to make sure we cover it all. But if you do need a zero down option, the general rule is, if your income is no more than $145,000 a year, we do have zero down options available in all statewide Washington state. The most popular one is called Home Advantage. And what it is, it's a combination of two mortgages. We give you a first mortgage for 97% of the sale price, so basically 3% down. But then we give you a second mortgage for 4% of the first mortgage loan amount, which covers that 3% down payment plus some closing costs. The second mortgage has an interest rate of 0, and there's no monthly payments required on it. It just sort of sits there until some point in the future. If you refinance or if you sell the home, then that would be paid off. The first mortgage, the only downside to it is that the interest rate is higher. So for instance, the prevailing rate right now for a normal 30-year fixed rate is today we're at about 3.125%. Whereas the 0 down option is 3.75, so it's a higher interest rate. But you can also buy a home with 0 down. So if you haven't saved up the cash, that would certainly be a good way to get into it. We also have other programs. If you have anyone in the household who's disabled, there is a Seattle specific program that can give you up to $55,000 in down payment assistance. There's an east side one called Arch that can give you up to $30,000, although they're what are called deed restricted properties. There's only certain properties that are eligible for that program. We have programs for veterans, and then we also have a program called Opportunity, where if your income is below the median income limits, which right now works out to be around $83,000, that could be a program as well. And then a few other 0 down options. One is called USDA, and yes, that's the stamp you see on your meat. But USDA also guarantees mortgages. We used to call it the farm home loan, with the only problem being that you couldn't use it to buy a farm. But USDA is a 0 down program, and it's available in rural areas. So around here, it's going to be sort of anything that's east of Highway 9 to the north, or Highway 18 to the south. Or if you got to take a ferry to get there, many parts of Kitsap County, Mason, Jefferson County are eligible for that program. There are some different income limits for that program, so it does have a few restrictions, but it's actually pretty cool. If you're a veteran, you've got the best program out there, bar none, 0 down, no PMI. And just a great program. And there is a program also, which right now is maybe a little bit stagnant. It's called HUD Good Neighbors Next Door. This is for HUD homes. These are homes that have been foreclosed on by FHA. There is a list of HUD homes out there. It's pretty small in our area because our market's too strong. Homes don't really go into foreclosure unless there's some serious issues with them. But that program could come back in the future, or more HUD homes could become available. If you are a firefighter, K through 12, EMT, police officer, nurse, you can basically buy a home with that program for half price. What happens is you buy it, you put $100 down. If you live in the home for 3 years as your principal residence, half of your mortgage debt is forgiven. So it's a pretty cool program. Reba talked a little bit about pre-qualifying and pre-approvals. And I'm going to just harp on that just a little bit longer because in our market, most lenders will do what's called an automated loan approval. I can do that too. It takes me less than a day to do that, which is fine. But if you're in a competitive bidding situation, which let's face it, you will be, it's better to have a fully underwritten loan. What a full underwrite means as a lender is we've processed your loan as far as we can before you found a property, including verifying employment, verifying income, credit, all of that. We asked for all your documents, pay stubs, W-2s, bank statements. We do all of our verifications, and we underwrite the file. We issue a loan commitment. Now that commitment is binding to us as a lender. It's not binding to you. I mean, you don't have to go with us. There's no cost to this. But when Reba's in there and presenting your offer to a seller, and there's 30 other people trying to buy the same home, the fact that you're fully underwritten will put you at the top of the list. It really, really makes a difference. I can attest to that myself. We're just recently selling my dad's house, and we looked at all the offers, and the ones that were already fully underwritten, they went to the top of the list, because as a seller, I know that those are the the offers that have the lowest risk to me, the highest probability of closing. So full underwrite, super important, takes a little extra time, to process those. It can be a week, maybe 2 weeks, depends on how quickly we can get all of our verifications back. So that one takes a little bit of additional planning. But I'd say if you're really getting serious seriously looking out there for homes, strongly recommend that you do the full underwrite.
And the thing to think about, guys, is that by doing that, you're actually, again, lessening your stress through this whole thing. Because if you had to wait till you were in contract to then provide all that documentation, you'd be doing it in a much more compressed amount of time. And
Right.
with the stress of like, is this going to work? Is this going to work? Doing it on the front end, make sure that you have more than enough time to get all the things that you need and to go find the documents that are necessary versus the scramble to get it all together in a short period of time.
And speaking of that, let's talk about TRID, the Truth in Lending Real Estate Settlement Procedures Act Integrated Disclosure Rule. And what TRID does is it has some mandatory waiting periods when we're processing a loan. One starts at the beginning of the transaction. Within 3 days of you making application as a lender, we must give you loan disclosures, and then those have to sit for 7 days before we could move towards the next phase of the transaction. Well, when we fully process your loan, we get to the very end, we issue our final loan approval. With TRID, we're going to have you sign a document. It's called a closing disclosure. Once you sign that, we have to wait 3 working days before you can sign your final paperwork. And then you sign that, and then typically your closing would be a day or so after. So let's say that you get into contract on a home and you've got a 30-day closing. When I back out a day for funding, a day for signing, and 3 days, working days for TRID, I only have about 16 or 17 days, working days to process your loan. So even though a 30-day closing sounds like a long time, it's a whole month. From my eyes as a lender, it's not. Things happen very, very quickly. And if it takes an extra 2 or 3 days to get documents into me, we need something, this or that, all of a sudden, we're looking at delays in your closing. So when we're fully underwritten, that again, it does take a ton of the pressure off because we've processed almost everything already. We still have a few things to do, especially regarding the property, getting insurance, getting an appraisal. But that really saves us a ton of time in the end. Big long thing talking about the steps to financing your home. Reba talked about a bunch of these, in her presentation. I just talked about pre-approval, basically making application. We want to do that as soon as possible. Processing is the verification, and the first 3 steps the first 4 steps we really can do, if we're pre-underwriting you, fully underwriting you. During the processing stage, though, we also will order an appraisal of the property. And the appraisal is not the same thing as a home inspection that Reba was referring to. The appraisal is the lender sends their appraiser out, and they're looking at the property really more to determine what's the fair market value of it. They will look at are there any glaring issues of safety or soundness. They would call those out, something that your home inspector would have done already. But really, we do what's called a comparative market analysis. The appraiser has to look at your home and then find 4 or 5 other homes in the same neighborhood that have recently sold that are similar enough in age, size, style, bedrooms and bathrooms and all that to compare to. And then they make adjustments because no 2 homes are identical. They'll come up with a market value. So we want that appraisal, 9 times out of 10, the appraisal will come in right at the sale price. Appraiser knows what you're paying for the home. Sometimes it doesn't, though. It can come in, in rare cases, knock on wood, we've been lucky, it can come in lower, than the sale price. If that happens, as a lender, we're going to base our down payment and our loan calculations on the lower amount, whichever sale price or appraisal, whichever is lower. So when we get into these competitive bidding situations, there always is a risk that as the price goes higher and higher and higher, that we could see an issue with an appraisal. We've been lucky lately. We haven't had that happen. Part of that's because I know Reva does her research, before we go in on an offer, and she knows what the comps are. I don't have that same luck with every real estate agent that I work with, but lately we've been lucky. If the appraisal comes in higher than the sale price, and we've seen that happen, many times as well, we just get real quiet about it. That's the appraisal is between us, right? So we don't tell the seller that. We certainly don't want the seller knowing that, because if they knew that, they might try to torpedo the transaction. So once we got the appraisal back, we've got your title policy, we've got your homeowners insurance lined up, we can issue our final approval. We go then issue our closing disclosure, and the TRID 3-day waiting period kicks in. After that, you sign your final documents, and then the next day or so, the transaction will close. Your final cash to close, your down payment, anything, cash due at closing, needs to be guaranteed funds. And that's either a cashier's check or a bank wire made payable to the escrow company that's handling the closing of your transaction. It's really important that you plan ahead for that as well, because there can be delays. In fact, I think, Reba, I might have sent this to you, but yesterday, the Federal Reserve System, their computers crashed. And it's the Fed system where all the wires are sent. And so we had about a 4-hour outage where no wires were being sent to escrow companies. And that did delay several closings, because the wires just didn't show up, and escrow can't close until they've got the money. So plan ahead, try and get your money to escrow a couple days in advance, if at all possible. You'll have all those numbers and everything from us, and we give you instructions on how to do that. Also, with that said, just one thing to be careful about when you are wiring money, make sure that you have absolute confirmation of the wire instructions. Once you have those wiring instructions, there should be no changes to them. If you get a random email saying, oh, your wiring instructions just changed, that's a red light. Double check on that. There have been instances where scammers have tried to redirect wire money. Once the wire is sent, you have maybe an hour or so to recover it. After that, it's gone forever. So you got to be really, really careful, when you're wiring money.
Insurance for that either, guys.
Nope. So just be careful. Double check with us on anything like that. Documents needed. What we need, if you are a standard salary, hourly, W-2 type employee, we'd like your pay stubs for the most recent 30 days. So 3 if you're paid every 2 weeks. Your W-2s for the last couple years. 2 months of bank statements, and we need all the pages, please, even if they're blank. If bank statement says pages 1 of 5, we need all 5, or else we're going to come back and ask you again. And a picture of your driver's license or ID, and we're good to go. If you're self-employed, it gets a little bit more complicated. We're going to ask for a couple years of tax returns, year-to-date profit and loss statement, and a balance sheet. And we do ask for 3 months of business bank statements. This is a new COVID requirement. We have to reconcile deposits to that account to verify your income, and of course ID as well. So pretty straightforward. I know I have an online loan application. You click on that and you can fill out application right online, and then it gives you an option to very safely upload your information. So it's not, just flying around the internet. So very, very straightforward. What's that?
And you don't have to be Baby Yoda.
You don't have to be, no, that's right. Yeah. Somebody sent me that the other day. It kind of cracked me up, because I actually had this conversation today with a client who gave me page 1 of a 5-page bank statement. And it's like, no, I need all 5.
You and I have had this conversation with a lot of people over the years.
Yes, I have. That's right. That's right.
Awesome.
All right. Well, that's all I've got. I hope this is helpful. The kind of getting prepared and everything for this whole process is going to just make it so much easier and smooth for you. And that way also, when you're fully underwritten, we can back you up, very, very strongly when you're in that offering stage. It's important. I always try to write an approval letter that is specific to the property you're offering on. We'll put the address on it. We put the price on it. I kind of joke because I'm usually waiting for that phone call from Reba, at 6:30 Friday night, or might be a Saturday or Sunday. But it's important. It's really important that we're there when you need us to back you up, and to not only make sure your mortgage is processed smoothly, but also that you win the offer. Because there's no point in doing everything else if you don't get that offer accepted. What questions can I answer? Is this helpful?
Oh, it's definitely very helpful.
Good. I'm going to take my share off here. All right. Well, good. Any specific questions as we I think we're just about ready to wrap it up here.
Yeah, I got a question. You talked about the interest rates are kind of creeping higher. Assuming that there is another stimulus package coming out, and kind of how that affected interest rates over the last 12 months. Do you think they would creep back down again, or did those market impacts were they not really affected by those previous stimuluses?
That's a great question. It's actually the stimulus that is causing the rates to rise right now. It's a combination of a few things, but the financial markets have determined just the sheer size of this one is inflationary. Right now, the federal government is spending around 120% of GDP, meaning that they're borrowing a lot of the money that's being spent. The way they borrow it is by selling bonds, and that competes directly with the mortgage markets, which are also a bond. So one of the things that happened today that was kind of one of the driver of the rates coming up is we had a really lousy bond auction today. The Treasury auctioned off 7-year bonds. It did not go well. There were not enough buyers, and when that happens, it bids up essentially bids down the price of the bond, which increases the yield of the bond, the interest rates that those bonds have to pay to be attractive enough to be bought. And that's exactly what happened today. There's some more kind of technical stuff that goes into it, but there's what's called convexity trades, and we've been kind of struggling with that a little bit over the last couple of days as well. That's where bond traders are trying to stretch out the maturities of mortgage-backed securities. Mortgages can be paid off at any time. When rates are low, they get paid off early. When rates go up, it takes longer for them to get paid. And sometimes the holders of these bonds get stuck, on the wrong side of that equation. And so there's been, it kind of gets a snowballing effect. And we had some of that going on today, especially. So the fear, the bailout, the stimulus program is something that is considered to be inflationary. And that's the biggest fear of the bond market is inflation, because that erodes the value of bonds. So they're kind of looking at a combination of the stimulus plan of possibly higher corporate taxes, a minimum wage, and increased oil prices, energy prices. All of those things are kind of on the minds of bond traders right now, and they're trying to figure out kind of what to expect from it. Yesterday, the chairman of the Fed, Jerome Powell, came out and said, we are not worried about inflation. And everybody said, yeah, right. And the bond market continued to kind of go on its spiral. So we'll see. I'm hopeful that we'll settle down tomorrow, because I was kind of mentioning this whole convexity thing. We think we've kind of hit the limits on that. So if that's the case, we could see a little bit of a improvement in rates over the next couple of days, but I've given up trying to second guess this market. So long-winded answer to that, but of saying we don't know.
Awesome. Thank you.
Yeah. Awesome. All right. Well, that's what we've got here for you. I think we'll have a little bit of additional information that we can send out and kind of just, overlapping some of the information we talked about and a little bit extra as well. I know one thing I didn't talk about were renovation financing if you can't find quite the right house. And I think I will send out some information on that if that's of interest to anybody. Any other questions before we wrap it up? Awesome. All right. Well, thank you all for listening in. Hope this was worthwhile for your time and informative, and really appreciate your hanging around with us on a Thursday night.
Thank you.
Yeah, thank you both. We appreciate it.
No, this was awesome. Thank you.
Yes,
Yeah,
thanks
thanks.
everyone. And if you're also looking for some other ongoing information, Eric and I do have the radio show Open House with Team Reba that goes into podcast after each week's show. So look on different podcast sites like Spotify, iHeartRadio, iTunes, that kind of stuff. We're constantly talking about the updates of what's going on with the market. And then we have, as I mentioned earlier, people like from insurance companies, mortgage insurance, credit. I mean, there's just a big litany of topics around the marketplace and what impacts you as a homeowner and a purchaser. So feel free to check some of those out as well. And thank you everyone for your time. We are going to send documents out tomorrow when I've got my staff in. I've got both Eric's presentation and my own. So in case you wanted to be able to refer back to that. And then we're also going to be sending out, if you aren't someone who's already worked with us before or is planning on working with us, questions for interviewing agents. I know I sent something similar to Harrison before. And Eric, if you have additional besides this, then if you want us to send it as a package, we can, or you can send it out on your own.
For
Okay.
sure.
All right. Thank you, everyone. We really appreciate it.
All right. Thanks, Ryan. Have a great evening.
Thank you. This is awesome.
Again.
Take care.
Thanks a lot. Okay. Bye.
Have a great one, everyone.